August 1st, they pay. And everybody pays, everybody has to pay, and the incentive is that they have the right to deal in the United States. We're probably 2 days off from sending them a letter. We are talking to them. I just want you to know, a letter means a deal. Today we're doing copper.
Copper, what would that tariff be on? The sectional tariff?
I believe the tariff on copper, we're going to make it 50%.
President Trump doubling down on tariffs, now threatening a 50% duty on copper, the metal supporting global growth. We're live from Vietnam, an Asian economy caught in the crossfire. From the Techcombank Investment Summit here in Hanoi, this is Insight with Haslinda Amin. We'll bring you exclusive insight today from top executives at one of Vietnam's largest investment firms, a leading lender, and the president and CEO of the U.S. ASEAN Business Council, representing 180 American companies operating in Southeast Asia. Our top story today, President Trump signaling a renewed determination to push forward with his aggressive tariff regime. He's doubling down on his August 1st deadline for country-specific tariffs, despite earlier indicating that he was not 100% firm on the target date. The posturing comes after traders initially shrugged off a series of letters he sent to countries that had not succeeded in brokering quick trade agreements. We're also keeping an eye on copper prices after the president said he would impose a 50% levy on imports to the U.S. Pharmaceutical stocks also in focus today after Trump flagged a 200% tariff on drug companies if they don't move production to the U.S. Well, we're here today at the Techcombank Investment Summit in Hanoi, a week after President Trump announced that Vietnam was one of the handful of countries that's managed to secure a trade deal with the U.S. In a post on Truth Social last week, Trump said Vietnamese exports to the U.S. will face a 20% tariff, marking a big step down from the eye-popping 46% rate he announced during the so-called Liberation Day back in April. But Lombard Odier Asia CIO John Woods told us earlier this week that other Asian countries might not be too keen to replicate the deal. Indian School of Business professor Nimalia Kumar also thinks the 40% levy on goods transshipped through Vietnam is especially problematic.
The Vietnamese template is, of course, the model that much of Asia will be seeking to avoid. The UK template, conversely, will be the bilateral deal that, indeed, they will be seeking to replicate.
We don't know what defines a transshipment. You know, every product nowadays uses inputs from various countries. So if you say inputs from various countries is transshipment, then every product is transshipped.
Still, JPMorgan is turning more bullish on Vietnam's outlook after the trade deal announcement, upgrading its stocks to overweight. The bank thinks Vietnam's equity flows will resume with a key overhang lifted. It also expects strong economic growth, setting a new bull case target level for the VN index of 1,600 by year-end. That said, JPMorgan says some concern remains over the 40% tariff on transshipments, given uncertainty over how that will be defined and also how it will be implemented. Our next guest also says Vietnam's equity market remains structurally bullish, supported by reform momentum, resilient earnings, and easing global headwinds. Let's bring in Thu Nguyen, Deputy CEO of Vina Capital Fund Management, which oversees about $4 billion in assets. Thu, good to have you with us.
Thank you.
First off, your take on the 20% tariff. Yes, lower than the initially targeted of 46%, but still 20% is high.
For Vietnamese people as well as investors in the stock market, we saw that as good news at first because the 20% obviously is much lower than 46%. And now with new information about tariffs imposed on other countries, it seems that 20% is actually a fairly good deal. Of course, in terms of the share that some of the Vietnamese exporters would have to carry in terms of the sharing a burden with the US consumers, it might eat into the margins of these export companies, causing the profitability of the companies to change from before. So for us, we are analyzing the impact on various export companies. I think the degree of damage is different from sector to sector. For instance, I think with regards to textile, Vietnam is in fairly good standing with other competitors such as Bangladesh and so on, in terms of tariffs imposed. In terms of wooden furniture, it might be a bit more damaging given that it's a cyclical product to the consumers. But by and large, we would think that Vietnam stands in a very good position to continue attracting FDI because FDI investors look at many long-term factors, including the country's structural economic growth, the demographic dividend that we continue to enjoy, and the fact that our workforce is fairly young and adaptable to be able to be upskilled into higher technology manufacturing
So lots of
activities.
factors to drive the optimism, yet we have seen an exit when it comes to foreign funds. Will the 20% tariff, which is seen as relatively lower than the rest of the region, be enough to attract foreign funds back?
In fact, the initial tariff announcement on April 2nd caused the market to tumble about 18% within 1 week. But since the 20% was announced more recently, the market has actually reacted very positively, with foreign flows returning to the market in the tune of $287 million US, bringing the net outflow down from previously 1.6 billion to now just about 1.3 billion. So we actually forecast that foreign flows would return to the market, not only because of 20% tariff is relatively better than the region, but also because of our imminent upgrade by FTSE to emerging market status, expected to be by the end of this year.
How much of a lift do you think that will provide the markets here in Vietnam?
The upgrade?
Yes.
So we
And
forecast...
how much has been priced in already?
Right. We forecast that the passive inflow could be in the region of $1 billion, and the active inflows could be a few times that. Some of that might have been factored in already, but we see that more clearly in the past, in the past few weeks, because foreigners, I think, were adopting a wait-and-see approach. But when the 20% tariff was announced and was interpreted by foreigners as a good deal for Vietnam, that has actually translated into inflows in some of the most liquid companies in Vietnam.
The VN index currently up about 10% year to date. How much more upside do you think? Especially when you see funds actually gravitating towards, the likes of China, where they see valuations are looking still very cheap.
Valuation of the stock market in Vietnam is at about 10 years low, one of the lowest levels in 10 years, and at about 1 standard deviation below the historical mean, at 11 times forward earnings. And this year we forecast the earnings growth to be about 13 to 14%, and also next year 14 to 15%. So that's relatively attractive in the long run. Also, the GDP growth target by the government is quite ambitious at 8 to 10% per annum in the next couple of years, and that translates into EPS growth for the market, multiples of that. And within the stock market of 1,600 companies, the top 30 companies may deliver earnings growth above 20%. That should be very attractive. Also, in terms of the performance of the stock market year to date, it has been very narrowly based, and therefore there's opportunity for other stocks to catch up. Amongst some of the better companies have actually not yet caught up with the blue chip rally that we've seen year to date. So because of the low valuation, high earnings growth, and the structural reform that we're seeing across the economy initiated by the government in order to enhance innovation and improve efficiency across the economy.
Might you be too hopeful that the GDP target will be achieved? Because they say a 20% tariff would actually eat into 2.5% of GDP growth, and that would hurt earnings of companies going forward.
I think all of that analysis is fluid because there are still lots of inputs that have to be clarified before we can arrive at a 2.5% erase of GDP or not. But I think what we know about the government's political will to drive the economic growth has been demonstrated year to date through an increased a very significant increase in infrastructure spending and also a very drastic streamlining of government offices to enhance efficiency across the economy. And so we are quite confident that the 8% GDP growth this year could be achieved, judging by the 7.5% GDP growth that we have achieved so far in the first half.
How should an ideal portfolio look like?
So we are active stock pickers, and our approach has been very successful in the Vietnam market because it's rather retail-driven. So there's opportunity for you to stock pick. So for us, we like fundamentally strong companies that are led by capable management with good integrity. That's very important for us in order to pick stocks. But if I have to pick sectors, I would look for resilient sectors with good amount of earnings growth while trading at reasonable PEG valuations. And they include the banks, the consumers, selective property plays, and material companies.
You talk about consumer plays. Consumption, retail sales have not been as strong as anticipated. Might that be a dampener for the performance of the stocks that you're picking?
That's very on spot because I think the real retail sales growth has so far not met expectation because of the structural economic growth and where we are today. We actually had expected real retail sales growth to be stronger, but so far it has been led by the very strong foreign tourist arrivals into Vietnam, but the domestic consumers remain rather skeptical. That being said, I think there's lots of good opportunities for the consumers and retailing companies in Vietnam, given that our middle income class is the fastest growing one within Southeast Asia, growing at 10% per annum. And urbanization rate in Vietnam is at roughly 20 years behind China. That should give a lot of opportunities to the companies that cater to the broader consumer-related themes within Vietnam, including real estate and so on.
Amid Trump's tariffs, the government has come out to say that it's willing to implement stimulus measures and do anything that's needed to prop up the economy. At Villa Capital, what are you hoping to see? What measures, what stimulus would serve the country well?
The government has shown that they are upholding the very expansionary policies in terms of monetary as well as fiscal policies this year in order to support the earnings growth, the GDP growth target that they are aiming for. And we are seeing that with the weakening of the US dollars, the government, the central bank will have even better room to maintain that expansionary policy towards the end of this year. That means that we are enjoying or will continue to enjoy the lowest interest rates in the last 20 years. And that should be very supportive of corporate earnings as well as consumption.
We know that Vietnam is big on digital transformation. In fact, it wants to play a big part in the AI revolution. Do you see trading opportunities there? And how might you deploy your capital?
It's a very new industry, for sure. We have some technology company listed in the stock market, but the number of stocks is limited to just a handful. We are seeing more and more other private companies that may not be in that particular area to start, but now venturing into the AI and new technology areas, especially with the new government reform policy as demonstrated through the Resolution 68. It seems that more companies would have opportunities in this space. But as far as listed companies are concerned, there still is not enough opportunities because there are not too many.
Yet. What would you like to see before you perhaps deploy your capital in the tech sector?
Well, I mean, traditionally, the tech sector in Vietnam has been quite small compared to other markets. It's only low single-digit contribution towards the overall market weight. And we're hoping to see that more and more of these tech companies would get listed. Right now, we are seeing some of the revival of the IPO pipeline that was at the peak in 2017 and 18, but has stopped for a while now. But we're seeing some of the companies within the Vietnamese economy emerging as potential new listed companies. And also, I want to expand the theme a little bit, because when we look at the technology theme in Vietnam, we don't only limit ourselves to the technology companies. We also look at companies outside of the tech sector which are embracing this digitalization trend to improve the efficiency, operational as well as financial efficiency of those companies. And those might include some of the banks or brokerage companies that are innovating or gearing towards becoming fintech companies.
Thu, I want to take a look at the macro environment. Because of all the uncertainties, we're seeing that, the Fed is maintaining higher for much longer. We're seeing quite a few central banks in Asia, putting a hold on their rate moves, the likes of RBA, RBNZ as well. How closely are you watching what the other central banks are doing and the implications that might have?
The other central banks move policy changes. But as far as the Fed rates are concerned, I think the direct impact on the Vietnam stock market may be smaller than you may see in other markets. What the stock market is most sensitive to are actually Vietnamese central bank's moves surrounding inflation control or interest rate changes. And so far this year, as I mentioned earlier, the interest rate stance has been maintained at a very low and supportive level to the economy, because it's the government's mandate to the central bank to support the economy in that sense. We are only concerned about the interest rate differential between Vietnam and the rest of the world, particularly the US. And in this case, because of the US dollar weakening, it has indirectly supported the Vietnamese government's monetary policy in not imposing too much pressure on the VND. Although, as you may have noted, the VND has depreciated against the US dollars compared to some other EM currencies that have appreciated. But that's because of Vietnam's export economy. So the weakening of the Vietnam dong vis-a-vis other competing currencies might actually be a good thing when it comes to our export growth.
So a lot of factors working for Vietnam. We're looking at potentially 8% growth, 10% growth through 2030. We're looking at the market being possibly upgraded to emerging market status.
Yes.
What's the biggest risk though?
I think the risks for Vietnam are actually more external rather than domestic. So we're talking about the Trump tariff era risk, the geopolitical tensions around the world that we're seeing more and more of. But within Vietnam, what we would be watching the closest would be the monetary policy by the central bank, because any further depreciation of the dong might be a negative factor to the stock market, although at this point we're not that concerned about it. And also the Fed's direction, no matter when the cut might happen, will mean that the pressure might be alleviated for the central bank in that regard. But I want to say that the 10% GDP growth might appear very bullish or very hopeful. But in fact, what we are seeing on the ground is that the government's transformation has been quite amazing. The speed at which the provinces have been cut by half and the ministry mergers reducing the government workforce by hundreds of thousands of people have actually impressed a lot of observers that we can achieve the growth target in the coming years.
Thu, good to have you with us. Great perspective there. Thu Nguyen, Deputy CEO of Vina Capital Fund Management. We're coming to you live from Hanoi, of course. Now, so ahead this hour, U.S. copper futures hitting a record high as President Trump sets his tariff price on the key industrial metal. More on that next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insights, coming to you live from the Techcombank Investment Summit here in Hanoi. Now here's a look at U.S. benchmark copper futures surging to a record high after President Trump threatened a 50% tariff on imports. For more on what this could mean for global metals markets and supply chains, let's bring in Bloomberg reporter Martin Ritchie. And Martin, we're seeing quite a turmoil in copper markets right now. Take us through, fill in the details for us.
Yeah, another shock for the copper market. Earlier this year, President Trump did promise to bring copper back to the US. He has signaled tariffs since February, but the 50% rate that he sort of announced in off-the-cuff remarks last night in Washington is kind of a lot higher than I think many people expected, and it has triggered sort of major moves in the markets overnight. We saw, as you said there, New York futures go up as much as 17% on the expectation that really the supply is going to tighten a lot in the US market. And we've seen prices come down a little bit on the London Metal Exchange, which is the global market, on the expectation that there's going to be more metal, relatively speaking, around in the future because it's not going to the US. He has given this 50% figure, but that's maybe all we have. It might come into force even as early as end of July, beginning of August, but there's a lot of details still to be filled in. You know, is that 50% going to be universal? Will there be exemptions for some countries, companies? Does it apply to all types of copper products? So these are all the kind of questions that people in the copper market are asking amid all this big price swings this morning.
Martin, some calling it a watershed moment for copper in 2025, and expectations are that those copper supplies headed to the US will diminish. I'm just wondering how this might play out in the supply chain. Since February, as I said, since Trump flagged tariffs, there's been a scramble to get copper from around the world, a lot of it from Asia, for example, to US shores ahead of the tariffs. So you've seen sort of record volumes coming out from Asian warehouses, from South America to the US to try and beat those tariffs. Now, the fact that the levies may come in, you know, as soon as the end of this month, according to Secretary Lottner, kind of means that trade is now almost slammed shut. There's not much more time to get ahead of that. So that trade is now going to end. Inventories in the US are relatively large now, and they're relatively low elsewhere in the world. So that's something that will perhaps ease or soften the price action in the immediate few months. Martin, thank you. Bloomberg Metals and mining reporter Martin Ritchie there on the very latest. Still to come, our exclusive interview with Techcombank CEO Jens Lottner, head of one of the biggest joint stock banks in Vietnam. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insights, coming to you live from the Techcombank Investment Summit here in Hanoi. Well, earlier today, we spoke with the CEO of healthcare solutions firm Zuellig Pharma. John Graham told us exclusively how they're coping with trade risks after President Trump said drug companies could face a tax as high as 200% on imports if they don't move production to the US in the next year.
So it's a huge surprise. Obviously, 200% is, I think, completely unexpected and came out of nowhere. And we've gone from waiving tariffs on pharmaceuticals to now 200%. But I think the devil is going to be in the detail. What is the 200% going to be applied to? Is it going to be finished product, or is it going to be component parts of pharmaceutical products? We'll have to see.
200% tariffs on drugs going into the US. Which countries in particular will be most hit by it? Some say India.
I think a lot of the generic products that are being imported into the United States are coming from India, some from China, some from other markets in Europe. Some of the more innovative products are also manufactured in Europe. There are large manufacturing sites in Belgium, in the Netherlands, in Switzerland, and in Germany. We have to wait and see what impact, and Ireland, of course, as well, what impact those have.
The impact will be in the supply chain, right? Post-COVID, we saw that happen already. How might this further tweak and change the supply chains?
Yeah, I think it's important to understand that most pharmaceutical companies, since the pandemic and even before, have a strategy of understanding how to make their supply chains resilient. So they always look at dual sourcing the ingredients, or now multi-sourcing the ingredients, the packaging, all the different components that make up the final product. So I think that we'll have to wait and see how these different components are going to be affected by the import tariffs. But I think there will obviously be an impact on cost, and most pharma companies now will be scrambling to understand what impact these tariffs will have on their supply chain.
And will there be additional costs, given that companies are looking at onshoring, nearshoring, and perhaps an acceleration of those trends within the industry?
I think definitely an acceleration of these trends. I think that most companies have already thought about putting manufacturing plants closer to where their customers are. But in terms of innovative products that are coming out of the large pharma companies, these are today more biological products. In some cases, they have dedicated plants, and most companies now will be looking at locating at least one plant in the US, one plant in Europe, and perhaps even another manufacturing plant elsewhere in the world, so that they can cross-register products and cross-import products.
Zuellig Pharma CEO John Graham speaking to us exclusively earlier. Now we're coming to you again live from the Techcombank Investment Summit, and our next guest runs what is one of the largest joint stock banks in Vietnam. Joining us exclusively, Techcombank CEO Jans Lottner. Jans, good to have you with us.
Thanks
in my conversation with Vina Capital, Thu did say that 20% tariffs on Vietnam is actually good. Do you share the view? It's relative. It's relative.
In the end, I think in the end it will be how will the other countries be taxed, right? And I think the biggest concern was always, are we getting too far off, which was the 46% in the beginning, right? I think that would have left Vietnam very isolated. But I think from what we see right now, if it's 20%, with other countries surrounding us like China, but even what we heard about in Korea or Japan now 25%, I think from a relative position it should look quite okay. So yeah, I would actually agree. It's a pretty good sign for Vietnam.
So 8% growth target for the year intact, 10% growth target through 2026 intact.
So I think that's a good question, right? And so the 10% probably need to do a couple of things. They need to have a couple of prerequisites, right? I think we really need to completely restructure the economy. I think we need much more participation in higher value-added sectors. And I think we need to create more value onshore. So again, I think the manufacturing need to be restructured. We need more domestic consumption. But if you bring all these things together, where one works together, I can actually see a scenario where you can get to 10%. And I think you've seen in the breakout decades of South Korea or Taiwan that this was actually doable. So I think it's a question of just how to do it and not is it possible. I think it is possible.
Is it possible because Vietnam is still seeing FDI from China? How strong is it FDI? What are you hearing? What numbers are out there?
So in the first half, total FDIs was something around 11 billion, still up 8% compared to last year. But from what we are seeing in our customer base, right, we see actually that FDIs from Chinese operations are still coming in. Right, I think as long as there's a 55% on China, as long as we also have unclarity what transshipment means, probably the best insurance policy is to have more value added onshore, right? And from that perspective, I think we see a lot of movement still from Chinese customers coming in, but also American companies are still investing, right? So I think even if the exports to the US might be a little bit impeded and there needs to be some restructuring, there's still a large Asian market which also needs to be catered for. So I think as a manufacturing hub, we still see a lot of FDIs coming in. I don't see that change anywhere in the future.
So there's no need to reassess the outlook for Techcombank itself. I know that there are ambitions to be a $20 billion market cap company. You're currently close to 10.
Yes.
It's a long way to go in 6 months.
And I completely agree. And so I think there are a couple of things which are still working out, right? So one is we will IPO our securities and business, which I think a lot of people have been waiting for, and I think will probably give a little bit of re-rating even of the bank. But then there's a couple of other news which will probably still be coming out. And again, I think one which is clear, we talked about it, that we are trying to set up a life insurance company, but we'll probably have a couple of other announcements in the next 2 quarters, and then we will see where we're ending up. If it's not happening this year, but next year, I think we're still
Talk to us about the IPO. Is it going to be the 3rd quarter of this year? How much shares are you selling, and how much are you looking to raise?
So again, I think it's probably end of 3rd, beginning of 4th quarter. I mean, depending a little bit on market sentiments. I think it will not be a big raise, right? We're maybe talking about 10 to 15%, which will ultimately be sold. And again, I think it's more like getting, on the one hand, some access for investors into that particular business. But I think the other one is also, there's a lot of wealth management opportunities and going forward. So I think we want to have a couple of additional capital in order to make sure that we can do the investments. One will be if the government allows basically setting up a crypto exchange, which would probably require quite some significant investments. So it's really raising enough capital to take full advantage of the next wave of growth.
You talk about how it's relying on investor sentiment.
Yeah.
How is investor sentiment right now? I mean, Vietnam is on the cusp of being, upgraded to emerging market status by FTSE Russell. That must be a huge plus.
So again, I think people expecting a little bit that this might happen in September. We will see what's happening. But I think overall, with all the stories coming in right now, we see also a net buy, again, from foreign investors coming in and trying to participate in the current environment. So I think we will see, right, if they're FTSE re-rating, right, if we see the real outcome of the tariffs, right, I think we might actually see a re-rating of Vietnam, right, and then of course it will lift all boats.
And that would be a game changer? That would bring back all the foreign funds which have left Vietnam, you think?
I'm not quite sure if it will be immediately, right, but I think when we at least go on roadshows, we see clearly renewed and keen interest, right, and people try to understand what's really going on. Some of the reasons in the past, a little bit unclear political transition, the tariffs and all of that, right? A lot of money basically shipped also to the US, but we're also seeing that the US is not what it used to be, so money is coming out, right? So the question is, will it find its way into Vietnam? And I'm actually still very positive that this is one of the best investment opportunities, and that's the reason why we organized that summit.
And the optimism, has that been translated to how business has been in the first 6 months?
So I think our results were actually quite okay, and so we had the 2nd best quarter ever in the first quarter. And so I think momentum is quite okay. I mean, you saw GDP growth, 2nd quarter was 7.96%. In the first half, it was 7.5. So I think business sentiment is actually quite okay. With the 20% or the new tariffs right now coming in, I think there's a little bit more confidence. And so consumer confidence probably is also going up. I think we have moved up a couple of the production from quarter 3 into quarter 2. So maybe there's a little bit of a slowdown, but I think we still should be in a good 7% range for the full year. And it, of course, also reflects on our business.
You're investing a lot in technology. You want to be the first fully powered, AI-powered bank. Where are you with that?
So again, I think we are having actually laid the foundation quite a bit, right? So the investments we did in the past in terms of data and all of that, and we're benchmarking.
To $500 million, that's a huge
That's
amount.
right. So it was quite a sizable amount. And again, when we benchmark ourselves, which we're doing on a regular basis, they're really saying you guys are not just in the region, but actually even globally amongst the top 5-10% in terms of how you structured your data sets and your technology. So right now it's just, I think, creating these use cases. And I think we're actually very, very optimistic that a lot of these innovations we can actually deploy in new experiences and new tools and for our AMs, but also for our customers. And we're working actually with, I just really came back from Seattle and being in the US to talk with some of the largest companies there to see what can they do and how can they help us to advance as quickly as possible.
So do you see the need to perhaps hire even more in the area of tech? You've been doing that since 2020 in a big way.
So I think we still looking out. Of course, the war for talent becomes a little bit absurd, right? If you see some of the moves Mr. Zuckerberg recently made on OpenAI. But again, I think within our means, and we're still trying to find good people, And again, I think we're seeing, again, there's also interest, right? People are saying, I want to be part of that Vietnam next growth.
Can you put a number to the headcount they're intending to add? Maybe 50, 100?
So right now we're basically, I don't think we add a lot of new headcount, but I think we will restructure our workforce. So we have around 12,000, 13,000 people. And of these right now we have maybe 16%, which are digital data and all of that. I think we will bring this to 25%, right? And at the same point in time, we will gain efficiencies in all the other parts of the bank.
Jens, thank you for joining us today.
Thanks a lot.
Great insights.
Thank you.
Jens
Thanks.
Lottner, CEO of Techcombank. Now coming up, US ASEAN Business Council President and CEO Ted Osius will be joining us here in Hanoi. We'll ask how he thinks the region is doing in trade talks with Trump next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from the Techcombank Investment Summit here in Hanoi. Well, U.S. Secretary of State Marco Rubio is heading to an ASEAN gathering of foreign ministers now underway in Malaysia. China's Foreign Minister Wang Yi also set to attend. Rubio's trip comes as President Trump threatens new tariff rates on several countries in Asia unless deals are done by August 1st. Our correspondent Min Min Lo joins us now from Kuala Lumpur. Min, what's the take on the ground? What's the mood on the ground?
Yeah, today is a little bit quiet because it's all about the ASEAN Foreign Ministers meeting, but the next 2 days will be busy because there will be dialogues with key partners, including with the envoys from South Korea, Japan, China, the US, Russia, and a lot at stake. Typically, a Foreign Ministers meeting is focused on security issue and geopolitics, things like the South China Sea conflict with China, as well as the political crisis in Myanmar. But of course, this time, it is the trade tariffs that are overshadowing the meetings, and Marco Rubio is on his first trip to Asia in his capacity as Secretary of State. So he will, of course, likely be getting a lot of questions on those tariffs, especially because Southeast Asia is particularly badly hit by those tariffs, up to 40% tariffs for countries like Laos and Myanmar.
What would it take for this to be a successful meeting, Min?
Yeah, again, there is a lot at stake because the ASEAN countries are very kind of stuck between a rock and a hard place, right? Because China is their largest trading partner, $980 billion in trade volume, which is more than double their trade with the United States. And ASEAN has been calling for a united stand so that they can leverage their collective strength, 700 million people, a $3.8 trillion economy, to negotiate with the US. But that unity is really being tested by President Trump setting individual tariff rates for different countries. So question here is, how can ASEAN come together to leverage their negotiating power, and also balancing between US and China as well, especially given the US has been cracking down particularly on transshipments through Southeast Asia.
That's right, ASEAN looking for a regional response. It's hard to do. It is an organization of 10 countries. Min Min Lo in Kuala Lumpur, we thank you so much for that. Well, our next guest believes Vietnam's efforts to secure a trade deal with the Trump administration gives it an advantage over regional rivals. Let's bring in Ted Osius, President and CEO of the U.S. ASEAN Business Council, which represents 180 of the largest American businesses in Southeast Asia. So Vietnam was pragmatic, among one of few countries to actually have a trade deal, and it's going to serve the country well.
I think so. Vietnam got in fast. You know, the first call from a foreign leader after the Liberation Day announcements was from General Secretary Tô Lâm. And a couple days later, he had negotiators in Washington on the ground talking to Secretary Bessent, Secretary Lottner, and U.S. Trade Representative. So I think they've been very pragmatic, very forward-leaning. They put a lot on the table, and the results are pretty good. You know, it's a framework. It's not a completed deal yet, but so far so good. They've managed, especially with in comparison to some of their neighbors, they managed to put at least a lid on what might have been the worst-case scenario tariffs.
Is that helping the companies you represent make investment decisions? Are they all in now in Vietnam, now that there's greater clarity on what's at stake?
I think so. What they want is certainty. And what they're hearing from Vietnam is a pragmatic approach to doing business with the United States, a pragmatic approach to dealing with the new administration in Washington. Not a lot of whining or complaining, just getting the work done. And the government in Vietnam has been very focused on administrative reform. They've got fewer ministries, they have fewer provinces, fewer layers of bureaucracy. They're more nimble, they're more open to investment, and they know that the growth that they aspire to depends on that continued flow of investment. So I'd say yes.
But some people argue that the deal has not been ideal. Vietnam has had to give up a lot. It had to slash tariffs on agricultural products from the US, also industrial input. And some are suggesting that is not the model other countries should adopt. What's your take on that?
My take is that they have decided to import more from the United States, including agricultural products. And I was able to preside over the signing ceremony for quite a few deals in ag. They've decided to buy more energy, not just LNG, but also equipment that helps Vietnam in its energy transition. They've decided to buy more planes, and because they have a very fast-growing aviation industry. These are just good business decisions, and they turn out to be good political decisions as well. So I think Vietnam is going to keep moving ahead, keep strengthening its ties with the U.S. private sector, and it has options. Vietnam has very strong trade relations with Europe, with China, with the rest of Asia, and it's going to keep pursuing trade in multiple directions.
The rest of Southeast Asia have not been so lucky. We're seeing tariffs between 25 and 40%. That's, some say, could be crippling to some of the economies, like Laos, for instance. I'm just wondering how you're looking at, I guess, how the tariffs have been imposed on these countries, which have been long-time trading partners with the U.S.
Well, it's added a big element of uncertainty to what was a very fast-growing trade relationship. This is one of the fastest-growing parts of the world. South Asia and Southeast Asia are driving global growth. And Southeast Asia, led by Vietnam, is growing very fast. And they want to keep growing. What has happened, at least in the last few days, is that President Trump has sent out a number of letters. 4 of America's top 20 trade partners are in Southeast Asia. And President Trump has sent letters to 6 ASEAN member states, and the negotiations are going to continue. I've just come from Washington, where we've had a slew, at least 7 ASEAN countries coming through, talking to business, talking to the U.S. government. They are taking a pragmatic approach. They're going to keep negotiating. They're all going to try to get to yes, and U.S. business wants them to get to yes, and U.S. business is going to try to help them get to yes.
How are they helping, and how are U.S. businesses in this part of the world mitigating the risks from the tariffs?
Well, they're helping partly in Washington by weighing in and saying, look, this is what's important to us, Treasury, Commerce, USTR. We do want to get rid of non-tariff barriers. We want to get rid of obstacles to trade, obstacles to growing investment. There are ways that these countries can, in fact, become more competitive and more attractive investment destinations by doing what the administration is asking them. So we're looking for win-win solutions. Do what you want to do anyway in terms of reform. But you can blame it on Uncle Sam. We have to do it because of the threat of tariffs. But we were planning to make these reforms anyway.
We know that there's a lot of uncertainties right now, and that includes, for instance, for Vietnam, 40% tariffs on transshipment. What's your understanding? Because some say everything, just about everything, is transshipped.
The definition of transshipment is going to become very important, because usually we think of transshipment as something comes from another country and you slap a made in Vietnam label on it. In fact, that's illegal. And the Vietnamese have been cracking down on that for some time. And the amount of actual transshipments in using that definition is actually quite small. So the number of goods that would be subject to a 40% tariff, I believe, would be quite small. But we need to know what the definitions are of transshipments. What percentage. No one, Vietnamese least of all, want to evade rules of origin. In fact, they want to respect rules of origin, and they'd love to see very diverse supply chains. So the devil is in the details here, and we haven't yet seen the details of this deal. One thing, though, I've heard which I think is kind of encouraging, and I don't know this because I'm not in the negotiations myself, but I've heard there may be an easing of some of the export control restrictions on tech goods for Vietnam. That would be great. From the perspective of our companies, it would be great to see an easing of those export controls.
Ted, before we let you go, lots of conversations on whether or not the U.S. remains a good trading partner. I think there are conversations around how, ASEAN should come together, Asia should come together and trade with each other even more. I'm just wondering how you're looking at it from the perspective of U.S. companies.
Well, of course, we want ASEAN nations to keep trading with the United States, but they do have options. They're very much engaged in negotiations over digital trade, for example, through the Digital Economic Free Trade Framework Agreement. They're engaged, they're in RCEP. ASEAN nations are in RCEP, they're in CPTPP, and we're not in all of those trading arrangements. So ASEAN does have the option of more trade within itself and with its immediate neighbors. I hope that they'll stay open and continue to do business with American companies, and I hope we don't get in our own way.
And the U.S. at risk from being isolated. Ted, thank you so much for that. Ted Osius, President and CEO of the U.S. ASEAN Business Council. And that is it for Insight here at the Techcombank Investment Summit here in Hanoi. Horizons Middle East and Africa is next. Do keep it here with us. This is Bloomberg.